Welcome to today's webinar with Gradient MSP and MSPCFO. We will get started in just a moment. We just kind of opened up the gates, so we're going to let some of the people that were waiting get brought in and get them settled, and we will get started in just a moment or two. Thanks for joining us today. All right, we will get things started. So good morning, good afternoon, good evening, depending on where you're connected from today, and welcome to today's webinar with Gradient MSP and our guests from MSPCFO on the art of decision making. We're all about leveraging decisions so you can make better decisions today to secure a better tomorrow. Quick introduction of who the heck I am. So I'm one of the guides of this webinar here today. My name is Colin Knox. I'm founder and CEO of Gradient MSP. I was the founder and former president of an MSP, which we grew to 4 million in revenue over the course of 5 years, and then exited that business, which was acquired in 2016, and went on to found and be the CEO of Passportal, up until its acquisition in 2019 by SolarWinds. And now here I am at it again, trying to find new ways to help MSPs grow and prosper. So very happy to be joined today by another industry expert and longtime player in the space, Larry Cobrin. He's a co-founder and CEO of MSPCFO. And Larry, welcome to the show today.
Thank you for having me, Colin. I'm happy to be here.
So you've got quite the wealth of experience across. I couldn't even fit everything on this slide. We wanted to keep it looking pretty, and it was so deep.
Bread baking.
The baking, the bread was the most important part there. So I guess that's the question everybody's got is what is the bread of choice for Larry?
It's a whole wheat sourdough.
Had to be a sourdough. I knew it. I should have put money down. So yeah, you've done so much in finance and business management and investment and everything else that, you know, it only seems suiting that you would co-found and run a company that's got CFO in the title there. But why don't you tell the audience today a little bit about MSPCFO and what you guys, do overall?
Sure. So what we try to do is, our goal is to help MSPs make better decisions on how to run their business profitably, whether it's identifying the individual contracts, engineers, clients, or projects that are dragging them down. Because what we can generally find is that a business can really see a meaningful improvement, not by fixing the entire business, but by focusing on 1, 2, or 3 of those things that I mentioned, the contracts or the clients. So you get to focus very narrowly if you know exactly where the problem is and if you understand exactly what's driving that problem. We've been doing this for, we've been working with MSPs for, since 2012, really. Been selling our product. We started as a consulting firm, been selling our product for about 5 or 6 years now. And this is all we do. We try to provide the right information to our partners so that they can make the right decisions to grow their business.
That's awesome. Perfect synergy for having you guys on, because we are, Gradient's thing is helping MSPs making better decisions. So it's so awesome to have another group on that's so focused on the data, so focused on decision making and how to impact that. For those who haven't met Gradient before or don't know what we're about, Gradient solely exists to give vision and voice to MSPs. We're starting with the vision aspect of that before we work to amplify your voice in the market, but we recognize that many MSPs have struggled to have clear visibility of their businesses and a true understanding of the industry as a whole. Things like how your peers are performing, what trends are actually occurring, a good understanding of the lay of the vendor landscape. And so it's our belief that together, both MSPs and channel vendors, we can work together to radically transform the industry through collective data and ultimately through data intelligence. Now, we intend to help foster that transformation by helping MSPs make better decisions, if you've guessed the theme of everything that we're focused on here, to really help them make those decisions by leveraging the improved visibility provided by data intelligence. Now, we've said data a bunch of times, we've talked about decisions a lot of times, so we've got this dream for data equality, and it's because we love MSPs. We've had nearly a 2-decade love affair with the IT channel between being an MSP and then being a channel vendor. And we want MSPs to succeed both individually and as an industry as a whole, especially since MSPs are integral to the success of small business and global commerce as a whole. So when we think about how we can best impact that success, it's by impacting the decisions you make day in and day out in your business. And the best way we can do that is by making sure you've got great data and lots of data to make those decisions, whether you're using that with a system and company and solution like MSPCFO, whether you're just trying to interpret and look at it yourself. That's what we're all about here at Gradient. So I'll stop the screen share now, and we're going to jump in and totally just nerd out on some decision-making, conversation here, since we've got access to a brilliant mind like Larry's. So, when we talk at Gradient about, impacting the data that is informing an MSP's decisions, what we've started with is on cleaning up dirty data. Now, I know we have our own definitions of how we would define that, but how would you define clean data and dirty data when you're looking at something for an MSP? Oh, you're on mute. Good old Zoom classic.
Yeah, no, it was the lawn people. I wanted to keep that down.
Oh, nice.
We define clean data because we need the data for making good decisions. Clean data is consistent and represents what's going on. Dirty data is everything else. Should there be a different billing code? Should a configuration be listed as inactive if it's not currently in use? Are costs where they need to be? Costs are a huge issue in the PSA. That's what we define as, obviously, we don't use a term like you do in terms of dirty, but clean data, good data, means that if I look at a report based on that data, it really represents what's going on. We see all the time that there's a flaw in the data, and it's something that people need to work on, and they do it. It's a process. It's a long process we go through when we onboard our clients, cleaning up their data.
So I guess there's another way to look at it, even could be accurate data versus inaccurate data, or even right down to when it comes to how you're advising or how your solution is positioning information, relevant versus irrelevant data, so that it's leveraged for the means that they're looking to get.
Well, not so much relevant versus irrelevant rather, because irrelevant data could be clean. But we do see quite frequently there will be a member in the system, an employee, where there is no hourly cost for that individual, or they zero out the cost when they do a certain type of work as if the person's off the clock. We find that all the time. We actually built some stuff in our system to identify it because we see it so often. And it's something people need to do to fix it. Remember, PSAs are really fundamentally designed to do two things, and everything else is great. But the two things they have to do is managing the ticketing for an MSP and manage the invoicing. Costs exist in a PSA, but they're only used for reporting because you pay your bills out of your GL. So we see so many issues there with costs.
Yeah, I can imagine. I think when a lot of MSPs are thinking about leveraging data to make decisions or becoming a data-driven organization, they typically always think finance. And it's obviously a very common thing, but maybe you can shed some light on what kind of decisions outside of just finance that data can touch in an MSP, and maybe if there's any decisions that can't or shouldn't be made with data when it comes to running a business like an MSP.
Sure. So when you say finance, though, I'd like to think of this a little broader. Let's look at a very common metric people use: if the effective hourly rate of an agreement, how much you get paid relative to the amount of work that you do. How much you get paid could be seen as the finance aspect of it. But if your effective hourly rate is low, Either you're getting paid too little or you're doing too much work. So data comes in that respect, and understanding what kind of work am I doing? Well, then if you look at the data a little deeper and you have the data set up cleanly and it's very granular, you can say, well, if I'm doing too much work, if I've identified the pricing's about right, but I'm doing too much work, is it because the tickets are taking too long? Or is it because there are too many tickets? And then once you've identified that, take it one step even deeper. If you can look into the data, if you trust it. Well, if the tickets are taking too long, can I look at the type, subtype, and item, or issue and sub-issue, depending on which PSA you're using, to identify what the issue is? Oh my gosh, they have a VPN issue. Maybe I should sit there and spend some time not resolving reactive tickets, but proactively resetting their VPN, because that's what's causing a lot of issue. You and I had a conversation years ago about when, in your previous life at Passportal, where we identified one client that once they switched to Passportal, not to tout your former company, they were able to save $750 on password resets.
Yeah.
If you can point to a specific issue of password resets, if VPNs, if printer problems, if Office 365, if your spam filter, if you can get so narrow with the data because your data is clean and you trust it, and you set up your type and subtype and do all that good stuff, you can say, well, I have a bad client and I'm going to fix it because I'm going to adjust their spam filter. And you then fix the profitability of the client, not from a finance standpoint, but from an operations standpoint. So the data, broadly, it touches just about everything.
And it's so cool to think about that. You really illustrated that well, right? That, it starts maybe as finance and profitability, or, how are you doing on a client? But to be able to drill right down into understanding what's underlying and causing the amount of time we're spending on that. Is it a certain fundamental issue that keeps recurring for the business? Is it the solutions that have been deployed or implemented for that client? All the way down to, do you have the right people working for that client or even working for your business, right? So it really can touch so much in the business. Do you think or see any decisions that maybe shouldn't be informed or made based by the data in a business?
Obviously there's the softest things, like where you locate an office. There's all this stuff like that I'm not gonna, obviously data, there is just no data on that. But I would argue just about every decision should be informed by the data, but the data shouldn't be the end of the story. You said before I had a bunch of jobs. One of the previous jobs I worked in was working at a hedge fund, looking at stocks. And there was this concept in finance called a story name. Names, you refer to a stock. A story would mean that it's a lousy company, but there's a reason, there's a story that you're comfortable with, and you're going to buy a lousy company. You're going to buy an underperforming stock because you think that story is going to turn it around. Well, when we look at companies and we identify underperforming contracts or underperforming clients, there could be a story. The story could be, well, they had a blow up. They've been a great customer for 5 years. They had a virus this past 6 months that we had to deal with, and that was an outlier. Or the contract's lousy, but they do a project every 18 months. So as a client, they're great, but that one revenue stream isn't good. Or the story could be, they're just a lousy client. So I think the data is the beginning of the decision. There then needs to be a discussion. Does this make sense? Is there a reason? And if there's not a reason, then we make the decision. So I think data should at least inform just about everything from an operations standpoint.
I would agree. I think that's awesome. So with that being such a fundamental part of the decisions that are being made, what do you do as an MSP, as a business owner, as a leader? What do you do if you don't trust the data that you're working with?
The answer is, it couldn't be simpler. You fix the data. Hard stop. You work with Gradient to identify the issues. Again, there's a couple reasons things are wrong. And there are different degrees of a problem. One degree of problem is you are, and I don't want to take over somebody else's term, but you're a low OML company and you're just not doing things in a structured, repeatable way. You work with a consultant or a coach. There's lots of great people out there, C-Level or ABC Consulting or ConnectWise Consultants, anybody out there, to help you understand the better way to enter your data in the system. Operationally, your people are not putting in type, subtype, and item. You can't have a data guy tell you your employees need to put in type, subtype, or item, or they need to put in all their hours. You need to set up operational processes. Operational processes for that to happen. And that's something you get from a coach, because you need to change behavior. The next thing is there might be some structural issues with your data that you never notice. As I said, costs frequently sit within your PSA and are never well used, except for reporting that people generally don't trust the native PSA reporting. So you need to fix those. And that could be done in mass. You just flip a few switches and things will feed a lot better. And the last one, which is the most problematic, and I think probably where Gradient comes in a little bit more, is these little one-offs where the operations are good, where your settings are right, but something's forgotten. So it's not like you can set a rule to fix it, because it really just slipped through the cracks. And that's when you need to go in and make sure that there's not an issue.
Well, so, I think like that's one of those things. You hit on a bunch of things. One is that fundamental first question you should ask. So if you don't trust the data you're working with, why? Why don't you? Now, what process or policy or procedure can you put into place to solve that, right? But the next part is it's just naturally occurring, right? People change roles in an organization. People will come and go from organizations. Sometimes it's impossible to, I'm going to invent a word, proceduralize everything about a business, right? And so at times, as things change, as stuff shifts, as the dynamic of the world happens, things can become out of date, inaccurate, irrelevant, things like that. So yeah, definitely is where Gradient can come into play. But yeah, you hit the nail on the head, I think, is putting the processes in place, getting that advice on what's best practice, and implementing things so that overall you're doing what you can, not just to correct the data that you've lost trust in, but to mitigate the potential of data that you're not trusting. So at Gradient, we plug into PSAs because that seems to be the central hub of everything and all the data for an MSP. But I'm curious your opinion on if it's better to have one single source of truth that MSPs are looking at and making decisions on and going, or is that just unreasonable and they should be expecting to use multiple sources of data to inform how they're looking at things and the decisions that they're looking to make?
Right. So it's obviously the answer is it's complicated. There should be depends on the question you're trying to answer. When you say a single source of truth, we have a lot of issues we deal with clients who want us to reconcile the PSA data, what we're seeing from the data, how we're creating reports from the PSA data with their general ledger. And we say, listen, that's fine. They do two different things. General ledgers are books and records and paying taxes. Your PSA and the reporting you get around that is more about managerial reporting. And there are reasons why there would be differences. We do reconciliations for people and we say, listen, our numbers don't match up month to month, but that's fine. Like if you pay a vendor in a different month and you get an invoice, your general ledger will allow you to do that. Everybody who pays all their bills in December knows that might not be for when they got their services, but they did it for tax purposes. When you look at your PSA, it should match. You should see a P&L where the revenue matches the expenses. But in terms of the single source of data, we rely upon the PSA because so many sources of data feed into it. We're sort of in the same boat that we have to build APIs to the data sources. Well, we don't have to build them to the RMMs because the PSAs did. We pull RMM data or data that's driven by the RMM from the PSA. We pull CSAT data from the PSA. So it really needs to be one. You don't want to have two different streams of data unless there's an excellent reason. That excellent reason might be taxes versus management reporting.
Fair. No, that makes a lot of sense. And it's also funny to think about how many integrations exist into PSAs today and how high the potential is to muddy the water in there when you think about, if an RMM is plugged in or if the PSA is pulling from an RMM, is everything configured properly for a primary, secondary, which takes control, is bad data overwriting good data and stuff like that. So there's been a bunch of research out there in the broad kind of just business world about the performance of businesses that use data-driven decision-making as an approach versus those that kind of just use gut-based decision-making. What do we know about the performance of MSPs that are using data to drive their decisions versus solely relying on their gut? Is there anything that you've seen over your years working with MSPs on this?
Sure. So I could speak more broadly, and I could speak anecdotally. Broadly, I would say the best thing to look at is, again, relying on somebody else's information, is the service leadership report. There is a correlation between higher OML companies and profitability. And I think it could be up to 15 points of bottom line net margin for very high OML versus low OML. High OML also correlates to better use of data. So that is a great indicator that better use of data drives better profitability. Anecdotally, I will tell you, I've spoken, over the years, many clients who've expressed to me they've adjusted contracts, adjusted service arrangements, adjusted compensation of their engineers, and seen positive results. We haven't really tracked it on a statistical standpoint, but anecdotally, I'll tell you, they've come to me and said they can gain each quarter $3,000 to $5,000 of additional revenue by adjusting the business they're already doing. Again, anecdotal, but they tell me that they wouldn't have found it without the data. So the people that use it, there's almost always information to be found. When we onboard a client, we show them good versus bad data, good versus bad clients. And they always say, well, I kind of knew about it, but I didn't do anything, which I find a little shocking. But then I find, well, what they were waiting for was data. The data is empowering for them to move forward. Because then when we talk 6 months later, they'll talk about restructuring the relationship. And that's something you really can't do without good data, to walk in there with the confidence that if you trust the information.
Mm-hmm. No, I think that's one of the biggest things is confidence, right? It's every time, I remember every time running a few businesses now, if I didn't have data readily available to make a decision on, whether that's, like actually one of the things you said, should we do this new office space? Should it be located here? Stuff like that. And it was always a gut-based decision. There was not a whole lot of confidence in that decision. So I wasn't out there being like, this is where we're going and this is why we're going to do it and this is how it's going to, everything else. It was kind of like, yeah, let's just kind of say like that was the decision we made. Let's see how this pans out. But then there was every time that we made a decision based off of data and, we looked at it, we looked at the trends, we extrapolated, we made a decision. We were confident and proud. And if anybody came and said, well, I don't understand, here's why, right? Even the confidence in explaining it and getting the buy-in from the team was so much easier to do that. So it's been kind of interesting. And I know we've looked at and found some research business-wise that shows about a 6%, at least outperformance of data-driven org compared to had they not used data to make their decisions. And that might not sound massive because a lot of people say, look, if I can't find 10 to 20% growth in something, it's not worth doing. But if you look at probably the average lifetime of an MSP, and let's say that's even 10 years operating, you have the opportunity to outperform yourself by 60% in a better improvement because that compounds annually. I think that's something that's well worth, looking at and going down and just having the confidence, let alone the risk of opportunity loss by making poor decisions or trusting the wrong gut thing. So when we look at making decisions based off data, and you're one of the biggest experts on coaching and advising and now building a tool that helps people do that, are there any specific kind of means or schools of thought with respect to best practices in interpreting data to help inform the decision that they're trying to make?
So what we think about is the data actionable? we think about data in two forms. Is it actionable or is it informative? And we think that you need to spend the most time on the actionable data. You know, you want to see something like, we have reports where we'll show you month over month, which clients are growing, shrinking, gained, or lost within recurring revenue. That's interesting. Not going to do anything with it. Maybe you'll use it as a stick to hit your salespeople, but you're not going to do anything with it. If you find a client that is costing you, you know, $5,000 a month in revenue lost opportunity, you then want to dig into that data. So we say the best way to think about data, is it data that will both present a problem and potentially a solution? That's actionable information. And you want to spend your most of your time there. You don't want to sit there, to the other example, discussing which clients are gained and lost ad nauseum. There's nothing that's really going to do for you. You want to sit there and say, what's our strategy for driving profitability based on this information? And if that information solves the problem, that's where you want to focus. That's where we work with our clients. How do we show them where the data is, what's driving it, and what might be the potential solution to fix a problem? And that's, if it fits into that actionable, that's where you want to spend your time.
So to fix a problem, and then would you agree that to also identify opportunity? So I can see an option where some people might say, oh, I want to know who my most profitable client is. But a lot of times they'll do that just for the sake of knowing, but then not dig in to see why are they your most profitable client, so that you could look to mimic that across other businesses.
Well, let's take that one step further. I would actually argue, generally speaking, what we see is the most profitable client is a big problem.
Interesting.
Because if you're getting paid, let's say you got paid $8,000 a month to manage a client, and they're hugely profitable and their systems, you've set it up perfectly. You've done a fantastic job. Their stack's awesome. And you talk to them for 10 hours a month. They don't care how well you did. They don't give you credit for setting up an awesome stack. They're going to say, I'm spending $8,000 a month and I see them for 10 hours. That's not quite right. Let's put this out to bid. So the most profitable clients, and these are real situations, we call them flight risks.
Yeah.
So identify your clients and then find a way to keep them happy. And there's different strategies you can use, whether it's, you know, giving to their charity, taking them out to dinner, or potentially saying, listen, we're getting in the VCIO business. Do you mind if we do this for you for free as we grow into it? So you develop a product and they get a service, and they're still tremendously profitable. All of that is far better than that $8,000 a month client saying, oh, we went down the street for $2,000 a month.
Yeah. You totally reminded me of a situation that happened in our MSP. It was kind of, it's eerily bang on point with what you were saying there. Is we went in, we actually closed this deal in a first meeting. So we met, we had already gathered some information about them. We went in with a proposal based off what our initial stuff was. It was a $15,000 a month contract. And we went in, we proposed it, everything else. They signed the contract in that first meeting because they were looking at, okay, we're going to outsource, we're going to switch from internal IT to MSP. They didn't realize that that night they were going to call us and say, okay, we just fired our IT. Can you come in and take this over now? And there were a couple hundred people. But interestingly, like you said, we actually got a great initial onboarding project. The stack was solid. Everything was good. And, you know, about a half a year in, we looked at the contract and we saw, wow, we're making a ton of money because we were spending next to no time there. And we realized that a lot of the work we had done up front was the benefit of that. But my partner, and he's actually our chief experience officer now, kind of said, how long before these guys call us and say, we're not going to keep paying you $15,000 a month because we never need to talk to you guys. So we did actually take the proactive approach where we went in and we said, here's what we're going to do. We're going to help hire an internal IT help desk type person for your business that's always there, readily available for you. And then we're going to draw up your contract to X, and this is what we're going to focus on. And then we were fortunate we used BrightGauge, and we had some other reporting tools and everything else that, you know, we were able to deliver that extra value to show, okay, here's all the things that are happening in the background and everything else. But yeah, you're totally right. I've been totally mislooking at that for the last while, and when you said that, that slammed me right back to that contract.
Well, the funny thing is, when we talk to clients and we show them the unprofitable clients And the hyper profitable clients, we say they're flight risk. Actually, don't worry about the third one. They actually just left us. We get that all the time.
Yeah.
And that's what you want to protect.
Yeah, interesting. So that's pretty cool. When we look at, interpreting data and how to read it and making these decisions on the actionable data, it's pretty safe to say that your data is coming from the past, what's occurred historically or previously. But all of your decisions are made for future events. So what is the best approach to using the data from your past to help chart that course for your future, to indicate what should be done moving forward?
Sure. So the question you have to ask yourself is, why is the future going to be different than the past? If you have an underperforming contract, if your labor gross margin is 55% and you want it to be at 70%, what's going to change? And then you say, well, maybe I can change my pricing. That'll help my margins. So I want to look at what my agreements would look like. If I had an extra $5, 5% increase per endpoint on my pricing. What about if I was able to cut my tickets per endpoint by 5%? You can say, well, what is my goal to be for a particular contract, for a type of contract, for a client, all the clients, and then make that your goal. Because if you want the future to be different, predict how you're going to make it different. And then when that becomes your rock. I want to cut my tickets per endpoint by 5%. I can measure what's my tickets per endpoint, track it over time. Is it going down by 5%? That then becomes your goal. You're right. Data is historic. The future is, past is prelude unless you change it.
So I think that's great. And when you think about kind of one of the first things you said there was, what is going to make the future different than the past, right? How can you be certain that there's going to be a difference, or is there going to be a difference? I think we all saw, in the year that's now a 4-letter word of 2020, that a year of disruption can occur, where a lot of things, whether it's business, whether it's just commerce, everything else just breaks data trends for growth, performance, results, operating metrics, everything else. How do you handle a disruptive year like that and still be able to lean on data and understand data? Is it more of a real-time view and more progressive trending, or how can you handle a disruptive year like that to make it through leveraging data?
Right. So the first thing you have to do is, for a time last year, and we recommended this to everyone in every way we can get the message out, was to build a budget. The thing to remember is what happened last year has been happening every 8 to 10 years. We had 2001, we had the financial crisis of 2008, we had last year. Something else is going to happen in 8 to 10 years. It's going to be different. We don't know what it's going to be, but you should be prepared for it to happen. I'm not sort of numerology predicting, it's just that's where it's been.
Yeah.
So the first thing you need to know is you need to have a budget in place and say, listen, I want to understand what's going on. I don't want to freak out. Because as it turned out, last year was not so bad for most MSPs. Most MSPs, very luckily, did fine last year. Their projects went down, but they were busy. Most of them made good money. Some of them got hit if their clients were in hospitality, perhaps. But we saw very few clients that really got destroyed last year. Some did, but very few. I mean, it's interesting. I was on a call in the States here about the Paycheck Protection Program, round 2, which you were only eligible for if you saw a 25% dip. And we're like, well, I don't know that many people that are eligible because they just weren't hit as bad. Like if you had a restaurant business, gosh, that was awful.
Oh man, yeah.
So what you need to do is you need to have a budget and say, listen, things are going to be bad, but I want to understand that. So again, this isn't so much of a data issue, but it's the starting point. You say, I was going to make 20% margins this year, whatever the number is. If I lose a bunch of clients, and understand who's at risk, so understand which are your restaurant clients if this is going to be an issue like last year was, and say I'm not going to get paid by those people anymore. Do my margins go to 3% or they go to -10? If they go to 3%, you kind of tighten your belt and you get through it. If they go to -10, you make a decision. So it becomes a function of saying, I want to understand, and this we try to help our clients with this, which clients are stopping paying, or which clients aren't seeing tickets anymore, because they're the ones that I have to deal with not being here. Which ones are industries that I'm identifying as high risk? So you want to look at what verticals these people are in and use that to adapt your budget. What you really don't want to do is say the sky is falling without testing, without saying, listen, I'm going to lose 15% of my revenue. I'm still going to live. You don't want to fire all your staff. You want to say, listen, my project people aren't going on site for 12 weeks. Let's see if we can reallocate those people.
Interesting. So I think that's a really good tie into the link that data can provide between different topics in a business. So like you just mentioned, you've got things between, budget, income, disaster striking, reallocation of staff, and management of staff. What other links are there where you can tie things like financial statements and service desk metrics together to leverage those to help inform each other a lot better? So how you can impact and maybe even more so on the investment side of things of making investments in your business as a predictor of growth or success.
So generally speaking, I would say almost all data is connected. Your service desk metrics define your labor costs, define your capacity to service your clients. If you're selling your hours, it could define your revenue, as opposed to having everything covered under a fixed fee contract. So generally speaking, everything is connected. The interesting thing, and I don't have as good data on this, I'd love to have it, is what's a leading indicator of the other? How does service time delivery versus CSAT impact churn and client profitability? Because that would be very interesting, because then you would have a leading indicator. I want to make sure I'm comfortable with this data because now I see a leading indicator, and now I'm going to have to do something because this large client may leave me. And then that's where I need to make an investment, whether it's an investment of my managerial time or adding another resource to work on this. I don't have as good data in there. I think they're fascinating questions, but there's some really interesting things you can find out there when you bring it all together, how it all ties together. Because remember, here's the thing to think about. We always think about it this way. There's only one metric that truly matters to most MSP owners, and that is how much money can I bring home reliably year after year. That's driven by 1,000 metrics underneath it. We talk about effective hourly rate is driven by both how much money you're making and how much work you're doing. And it's driven by how long your tickets are taking, how much you're charging per endpoint. So everything, I firmly believe everything is connected.
Right.
It's just a matter of understanding those links. And we understand some of them, but we don't understand all of them.
Well, and it's interesting too, because how deep is the data well in some of those areas? Like you said, how does CSAT or customer experience, it affect retention or even upsell or anything else? But at the root of it for an MSP, how deep is your data on CSAT or customer experience? Because really, I remember when we ran our MSP, we could send out 1 million surveys and we would only get a handful back. And some of those were from people that just really liked us or really liked the person that went out and did the job because they've seen them a lot of times or whatever. So it'd be really interesting to see if over the years, if there's some kind of automated sentiment analysis that indicates how people are entering their tickets, how they're responding to things, how quick they're, all of that type of stuff. But that, I agree, some of that stuff would be really cool to have the data to start to understand that here's really where a great focus area can be from your business as a lever to really impact your growth, your retention, your success and stuff. When we think about kind of circling back to where we started the conversation, we talked about clean data and dirty data, or useful data or not so useful data, or fit for purpose type data. How can a company or an MSP go about figuring out or finding the data that's dirty or not relevant or not worthwhile for them before it results in them making a poor decision?
Okay, so as I said before, first of all, when we onboard a customer, we always look at their data. That's the first thing we do. I can make a plug for Gradient if you like, because there's the stuff that's out there, the one-offs that you kind of need to tick off and fix one by one.
Yeah.
Those are very hard to find because there's no rhyme or reason.
Mhm.
We're always looking from our standpoint to apply rules. If it's not really a rule that's been violated, it's causing a problem, which is difficult. There are some red flags. We always start by looking at the costs. Costs drive a lot. They actually drive how we split up product and labor on an agreement. They drive profitability, obviously. So we start with what we consider the red flags. We have in our system, we have on a macro scale, we have what we call health checks,
Mm-hmm.
and try to see what we think is good or bad. The challenge also is like, if somebody has an engineer and it's in the system that there's no salary and they're showing a zero cost, that happens all the time. We know that's a problem that needs to be fixed.
Yeah.
If you have a product in the system and you're showing a cost of $7 and the right number is $9, we'll never find that. So that's a different issue. I lost your mic.
Yeah. No, sorry. I've got a dog that's looking to get out the door. No, I think, yeah, it's very interesting to focus through that way. And I think a lot of times people aren't going to be able to determine if data is dirty if they're not looking at the data, right? Like you said, when you onboard somebody and you start pulling some initial reports and you start looking at those and talking about those, even in a past conversation, you said some of your partners will come back and say, like, there's no way that's how much time we're spending on something, or that, it's starting to look at and putting that lens of how accurate does this feel? Now let's dig in and see if it actually is accurate and it's just a surprise and it's been hiding there all along, or yeah, clearly we've got something wrong with the business that's misinforming this, or how we're putting the data into it. We also talked about how data that's bad is almost inevitable, whether it's your processes, whether it's just integrations that you've got and things like that.
Mhm.
But, do you have any anecdotes or stories or common examples that you've seen where an MSP's made some decisions off of bad data, or how easily some of those decisions could have been made by bad data and taken things wrong?
Sure. So let's think anecdotally. There is not bad data, but gut also. We have a client that knew that an agreement was unprofitable, and they wanted to go and talk. It was I think a professional service firm, perhaps a law firm. They wanted to go in guns blazing and say, we're going to raise your prices because you guys piss us off, and so on and so forth. We looked at the data and we found that they were dealing with, I would even call it not even level 1, like level a half issues.
Oh, wow.
Like changing the toner and understanding how Office 365 works. And they made a decision. They wanted to do lunch and learns to train the people. And they avoided what could have been a very hostile discussion with the client and turned it around to a very productive discussion with the client that they now kept. I mean, you talk with MSPs, and it's so difficult to obtain a new client. They do it all the time, but it's not, no one would argue it's easy.
Yeah,
If you can
it's not a frequent, steady flow unless you're plowing a ton of money into just bringing people in.
Right, but if you could turn an unprofitable client into a profitable client, I always argue that's the first thing you should do. When we start with a new client, one of the first things we say when we look at their data and we onboard them, they say, listen, first we say this is a no judgment call because we always find that somebody made a mistake in the data and I don't want anybody to get upset. The second is, we don't want anybody concluding the call with when you do a demo with their own data. Don't fire any clients. Don't call any engineers into your office to scream at them. There might be something wrong with the data. Because there's two things. Like if you look at a client and that client is unprofitable, it's one of two things. It's either the client is unprofitable or there's a flaw in the data that makes them look unprofitable. So let's try to understand what that flaw is. And then let's see, well, is that systemic? And let's fix it other places as well. And once we go through that a few times, then you can trust the data. And then you can call the client and have a horrible conversation or yell at your employee. But people who look at data without really testing it really run the risk of having the wrong conversation. And even worse than that, they have the wrong conversation confidently. If I were to approach you and I say, Colin, I'm just really unhappy with our relationship. You're overutilizing me and I'm not getting paid enough. And you sit there with you're scratching your head. Why the hell is he being such a jerk?
Yeah.
And you'd say, no, I think everything's fine. and I say, no, the data says otherwise, and I won't listen to you. Well, that's awful.
Yeah.
I'd rather have no data than walk in with like untested data.
Well,
Because if I have no data and I say, listen, I think there's a problem with the relationship, we can have a dialogue. If I have data at my back, even if it's wrong, it's kind of going to be one-sided.
yeah, no, absolutely. There's such a thing of having too much fuel for the fire versus just the right amount, right? Now I would agree, if you don't have quite enough data, then you're kind of in this information vacuum, which is not going to provide the best outcome necessarily. And in some of those cases, it's going to have to be, let's kind of go with gut, or let's wait until we have more data to inform this. And then there's that whole analysis paralysis, or if you just see too much too soon, too quick, then yeah, all of a sudden you go in guns a-blazing and something was misinformed, and bridges are burned very easily, whether that's, like you said, don't fire anybody based off what you've said or start screaming on people. Don't start going in and turfing clients, because the biggest benefit is to not just do a quick rip off and the most brash solution to a problem, but dig deeper into that data to find out why something is happening.
Can you fix it?
And can you fix it?
I think
Absolutely.
most MSPs find finding clients to be very cathartic. They're so excited. Oh, I can fire this guy. I've always wanted to. Well, maybe.
Could be
Let's go through
costly.
these first solutions first. Then if nothing resolves it and they're intransigent and they won't try anything, yeah, let them go. If they're nasty to your engineers, let them go.
Yeah. We actually even had an interesting issue in our MSP where we switched. I won't name the vendors, but we switched from one popular firewall vendor, or UTM, to another one. And we actually didn't correlate that a couple of our staff who were a little bit less adaptive were taking a lot longer to solve some issues and tickets and things like that for clients. And yeah, I can see easily us being like, clearly you don't know what you're doing and you're not good at your job, and I'm going to go in and just, you're on performance management now, or get rid of you. But when we started to dig in and saw that, okay, most of the tickets that they're dealing with are some troubles related to the decision that we made to go out and rip and replace all these firewalls out there and UTM appliances, coupled with the fact that we didn't make the investment to train and certify every single technician on our team on that new system. That was one where it was kind of our fault that led to it. So as soon as we realized some of that, we did this massive pitch and said, okay, every single one of our techs is going to go out, and we're paying for the time for you to go out, get certified on this. We're going to bonus you on the certifications and everything. And that made a huge turnaround for us, both in just morale, time to fix things, client stability, all of that stuff. But yeah, it's kind of interesting to see sometimes how your own decisions, previous decisions you made in the business, can be impacting an outcome of, looking like or appearing like it's somebody else's fault or something else is wrong, when maybe you didn't take the full breadth approach that we should have as the owners and managers. So, well, that is awesome. You've been a wealth of advice. I'm just looking at the time right now. Haven't seen other questions come in, although I didn't prompt everybody on the call that if you have any questions about decision making, leveraging data, understanding data, drop them in the Q&A panel within the Zoom webinar here. We'll probably just chit chat for a little bit, watch and see if any other questions come in from the audience that Larry can handle. But yeah, in the meantime, Larry, while we're waiting for some questions, maybe tell people a little bit more about where they can go to find out more about you, about MSPCFO, how they could engage with a business like yours.
Yeah, I'm not that very interesting, so don't worry about me. But if you want to find out more about MSPCFO, it's quite simple. Our website is www.mspcfo.com. There's plenty of links to contact us there. We'd love to show you what the system does. With all new clients, we do what we call on our side a real demo, where we feed your data into our system and then walk through what the system could do with your data. We'll tell you where there are data gaps, obvious ones, and talk about what we find. Usually people will get value on that first phone call. And then if you're unhappy or it's not the right fit for you, just let us know. We'll purge the data from our system and we'll part ways as friends. We're really just trying to help the community. So any way that we can do that. Obviously, we're trying to run a business as well, but we're really trying to provide as much value as we can.
Yeah, that's awesome. And I know we've had both current and former partners who were engaged with MSPCFO, and just the wealth of information we were able to derive, like you said, that one past incident when we were trying to figure out how is the one product that we've got actually impacting the business of a partner. And it was a mutual partner. You guys dug in and saw that they were seeing $3 per dollar invested in the Passportal solution per month coming back. So was a decent return for those guys, and was awesome for us to see and understand that as well. So that is awesome. No other questions have come in. I super appreciate your time, Larry, coming on and talking with us today about it all. And for anybody else that wants more information on MSPCFO, go to their website, dig in with them, give them a chance to show you what you might not know about your business today already. If you're interested in Gradient and want to take a look at cleaning up some of the data and understanding what might be lurking in your PSA, check us out at meetgradient.com. Completely free, sign up, self-service, get going, and we look forward to continuing on with everybody else and keeping educating the market. So thank you very much for attending today.
Thank you for having me. Have a great afternoon.
You too. Thanks, everyone.